Okay, guys, Bill Soriano from Pittsburgh again here. I wanted to come on live here today. I just did this video, but I'm not very good with Facebook Lives. I usually use my Camtasia software to record the videos, and so I did the live just a few minutes ago, but I didn't have the charts showing. So I thought I was sharing my screen, but apparently I wasn't sharing the screen. So let's make sure that I am in fact sharing the screen here, which it appears that I am. So again, let's start this again. So again, we're going to go through the charts here. Usually I do this about 7 o'clock in the morning, and then again it's 7 p.m. Eastern time. So I do it 7 o'clock before the open of the U.S. session, and I do it again 7 p.m. at night before the Tokyo session, and then if I am up, I will do it at 2 in the morning before the London session. But more than often, I'm not at that point. So we're looking for the three types of trades, as I talked about yesterday in the videos. We talked about money management. We talked about the three types of trades. Three types of trades are the 1 hour date trade, the 4 hour dare trade, and the 1 hour trade with the Fibo quantum indicator, which uses the Fibonacci sequence to determine when to take the trades. And that's what you see here on the chart right now. You see these lines here where it is giving a signal to sell or to buy up here. And it's also telling you what your buy stop loss is if you buy, what your sell stop loss is, and then it gives you profit targets as well, 3 of them, and you can't see them all right now because of where they are in the chart, but it gives you 3 profit targets as well for whether you buy or sell. So it gives you everything, the Fibo quantum indicator. For the first 2 trades, the 1 hour date and the 4 hour dare, you don't need to purchase any indicators. It's pure price action, just using the price and some moving averages. But for the third type of trade, the Fibo Quantum, you do need to purchase the Fibo Quantum indicator, and there is a link on this page to do so if you want to do that. Now, what we're going to do is we're going to go through the charts here, and the first thing we're going to do is we go to the 4 hour chart. We're at USD JPY, and we're going to check to check the global trend. And in order to do that, we use the 200-day moving average, which is the blue line, and we use the 50-day, which is the red line. So those are the 2 moving averages on the 4 hour chart. We're using them to determine the global trend, and then we also use them to determine if we may have a trade setup coming for the 4 hour dare trade. Okay, so right now, price is above the 200-day, which is the blue line, but the 50-day is not above the 200-day. So we're looking for that golden cross if we're going to buy, and if we're going to sell, we're looking to see if that death cross happened. Okay, and then we're also looking for that recent cross, which we have here. Okay, to see if there's a opportunity for a 4 hour dare trade, but the price has moved back up above the 200-day at this point. So right now, we would not trade either way on this pair. So let's move on to EUR USD. 4 hour chart, we're going to see that the global trend is down, right? We have the price below the 200-day and the 50-day is below the 200-day. This also gave a sell signal entry, the Fibo indicator, on the 4 hour chart. However, we don't take trades based on the 4 hour chart for the Fibo quantum indicator at this time. We may decide to do that at a later time, but at this time we're not doing that. We're just testing out the trades on the 1 hour chart. On the 4 hour chart, the trade that we would take is the dare trade, which has a different setup, obviously. So if we go back to the 1 hour chart, right now there is no Fibo quantum sell signal. There's no line showing up. These are the lines here. The last one that we almost got one here on Friday, right? But it didn't quite go through the sell entry. The last one we got was back here. And if we would have taken this trade right here, you see here it makes a move down about 60 pips. So we probably would have locked in at least 10 pips using our money management strategies that we talked about in the video yesterday in reference to the trailing stop. How we would, once we get into profit, we want to move to trail that stop up, because initially, look, when you take this trade, initially, there's where you get in. Your stop loss is 100 pips away. Okay, so again, you have to use that 100 pip calculation to determine what size your lot size is going to be, right? You can only risk 3% of your total investment, or what you currently have, your current balance. You can only risk at the most 3% in any single trade. So, you would have to adjust your lot size accordingly there. But the main thing is that we want to make sure once the trade does move in our direction, okay, that we use our money management. And I'm going to show you later in this video of an example where we didn't use our money management. But we want to make sure we're using our money management so that we're able to lock in profits when we have them. So let me show you what you could have done here. You get in, right? You're up 60%. You could have locked in. You're up 60 pips. I'm sorry, not 60%. You could have locked in at least 10 pips here. So it moved up. You would have got stopped out with a 10 pip gain. Then what happens is it gives you another entry point right here. Okay, so now you're not going to take any more than one trade at a time with any particular signal that you get. But if you get out of the trade with a gain, okay, a small gain, you can get back in the trade here. Okay, and then it moves down and you're up another 80, 87, 85 pips again. Since this is your second time in the trade, you may have just gotten out. If not, you would have locked in some profit there, probably 25 pips, and you would have gotten out with a 25 pip gain again. Okay. Now, if your money management strategy is a little bit different than mine, your trailing stop is a little bit different. Maybe you're a little more aggressive and you're a little more experienced. You might have stayed in this trade and you could have be up, over 200 pips right now. But that was a signal that we got, 4 days ago. Right now, we're not getting any signals, but we're looking for short positions here. We could get a pullback into this area of value, and that would give us an opportunity to look for a bearish candlestick pattern and then enter a trade using the 1 hour date strategy. And, over the course of the week here, I'm going to be cutting a video for each one of the three strategies, showing you them in action. And there'll also be a document in the group that will give you all the rules for the trade, everything that has to happen to enter a trade, and so on and so forth. So, but for right now, I'm just showing you how I scroll through the charts here. And I usually do this, like I said, at 7 a.m. and I'm very late here, so I want to get moving. So let's go to EURJPY, 4-hour chart, right? The trend is down. Now, on this particular pair, we just got a recent cross. We got a death cross right here, where the 50-day has just recently dropped down below the 200-day. So when it drops down below the 200-day, it's a death cross. When it moves up above, it's a golden cross. So now, since we have a recent cross here on the 4-hour chart, the trend is down. We can look for a setup for the 4-hour dare trade. Basically what that is we're looking for it to make a new low, and then we're looking for a pullback to at least the 50-day or pretty close to the 50-day moving average. And the pullback has to be contained inside the 50 and 200-day. Obviously, if it moves above the 200-day, then the trade would be, the trading signal would be, shot at that point. It would be invalid at that point. So right here, it moves down, makes a new low, pulls back, but doesn't get close enough to the 50-day. Moves down again, pulls back, and not close enough to the 50-day. Here it makes a new low, pulls back to the 50-day right here, right? And this is a beautiful shooting star right here as well, which is a bearish candlestick pattern that we would look for the 1-hour day trade, but we look for it to touch a different area here on the 4-hour chart. So what we're looking for now is we would be looking for this to make a new low. So we're looking for this to drop down below this low here. That's why I put this trend line here. And then once it drops back down below this low, we would look for a pullback to this low, and that's where we would enter that trade short. So again, more information on that's coming, but I just wanted to show you that's what I'm looking for as I'm scanning through the charts 1 hour before each session opens, and also at some point during the session as well. But I just want to show you what I'm looking for there. So again, global trend is down on the 1 hour chart. Right now, this is moving up. And so we're getting a pullback into the area of value, but that would be for a long trade. And you see here, this is a perfect example of a hammer candlestick pattern. Okay, so I want to point this out to you. Right here, we have a hammer candlestick pattern. See how the wick here is at least 2 to 3 times the size of the body, and there's little or no upper shadow. So perfect example of a hammer candlestick, and it's right in the area of value. This area of value on the 1-hour chart is the area between the 20-day moving average, which is yellow, and the 50-day moving average, which is red. So it's right in that area of value, and it's touching both moving averages. So if the global trend on this pair were up, which it isn't, this would be a perfect trading signal, entry signal to go long, because currency moved up, pulled back into the area of value. And then we would look for the next candlestick to go higher than this high, which it has done. So had the global trend been up on the 4-hour chart, we would be in this trade right now in a long position. But since the global trend is down, we don't want to go against the trend. So we're passing on this trade. So this is a good example here of a trade that we have to pass on. USD CAD, 4-hour chart. Global trend is up, right? Price is above the 200-day, 50 days above the 200-day. But on the 1-hour chart, it seems to be moving down, right? Actually, it looks like we got a sell signal here using the fibo quantum indicator earlier this morning on this particular currency pair, right? But since the global trend on the 4-hour chart is up, we would not take this trade. And as you can see, this is an example of this is not a very good trade, because what happens here is we don't get any kind of a move down, right? So we can't trail the stop, right? Because we didn't get any kind of move down. And now it's moving up, and this trade would be eventually almost stopped us out here, right? But right now would be down about 43 pips in this trade. So could turn around and move down later, but we didn't take this trade. We wouldn't take this trade because it's a sell entry, and the global trend right now on this particular currency pair is up. And the reason why we say that is because price on the 4-hour chart, we use the 4-hour chart to determine the global trend, and we take the trades on the 1-hour chart, right? That's for the 1-hour date, the 1-hour fibo trade. Of course, on the 4-hour dare trade, we do take the trade as well on the 4-hour chart. So don't want to confuse you there, but since the global trend is up, we would not take this short entry. Okay, let's go to GBP JPY. 4-hour chart, the global trend is still down, even though the price is moving up, getting close to crossing over the 200-day. And the currency is moving up, as that shows from the 4-hour chart. So we probably won't have any entries, have any setups for that today. NZD, JPY, 4-hour chart. Global trend is down. Price is moving up, though, toward the 200-day moving average. So what you'll see on the daily chart is you'll see that move up, and there's not going to be much chance probably for a short setup. And we will not take a long entry at this point, right? What has to happen for us to decide to go long on this? Okay, we need price to move above the 200-day, and then we need a second confirmation, which would be the 50-day to move above the 200-day. And that would be called what? That's the golden cross. When the 50-day moves above the 200-day, that's the golden cross. When the 50-day moves below, that's the death cross. Okay, so that's what we would need to happen in this particular currency pair before we would decide to take a long trade. Right now, we're looking for just shorts. Okay, GBP USD on the 4-hour chart, the global trend is currently down, right? And if you look on the 1-hour chart, on Friday, we did have a sell entry right here, okay? So if we would have taken that, we did not, because that was during the London session. We missed it. It was earlier in the morning. But you see it makes a big move down, 142 pips. Certainly would have been able to get most of this here, even if using our trailing stop technique. When it got to take profit 2, you would have definitely put in a trailing stop at take profit 1, which is a 77 pip gain, or you may have just decided to get out all the way down here if you were smart, right? Now, we're getting a pullback here into the area of value, and that's the 1 hour date trade. Again, I'm going to make a video for each one of the trading strategies, and there'll be a Word document with all the rules and everything you need to know about when to get in those trades and when to get out those trades. But I'll make a separate video for each one. But right now, what I'm going to do is I'm just showing you how I'm scrolling through the charts like I do several times a day. And I'll be making these live videos throughout the week here for you as well, so that you can get an idea how I'm doing this. So I'm making this one now. I'm very late making it today. Sorry about that. But I will be back on again at 7 o'clock Eastern time as well to go through right before the Tokyo session. So again, this was a very good trade for using the Fibo quantum indicator. And right now, we could get some kind of a signal here if we get a bearish candlestick pattern in this area of value between the 20-day, which is the yellow, and the 50-day, which is the red. And we always use exponential moving averages, and they're based on the closing price. So just so you know. And if we get a bearish candlestick pattern that touches both of these, that would be like a shooting star or a bearish engulfing, which is a 2 candle pattern. Then we would be able to take a short trade maybe later today. USD CHF, this is in a 4-hour chart. It's in an uptrend, right? And on the 1-hour chart, it's moving up as well. This could pull back into the area of value here between the 20-day, the yellow, and the 50-day, the red. And if you get a bearish, bullish candlestick pattern, right, touching both of these, then we may have a trade entry signal using the 1-hour day trade strategy for this pair later today. So AUD USD 4-hour chart. We're currently in a downtrend. Price is below the 200-day, 50 days below the 200-day. And if we go to our chart, though, this is moving up. NZD USD 4-hour chart's in a downtrend. 1-hour chart, it is moving up, right? AUD JPY 4-hour chart is in a downtrend, right? There's no recent crosses here. A recent cross for the 4-hour dare trade, right? We look for a recent cross to see if we have a setup for that. And a recent cross is one that's occurred within the last day or two. So you would be looking on this day or this day here. Nothing there. So this is in a downtrend on the 1-hour chart. We see it's moving up, so we're not going to have any kind of trade entries there. CAD JPY 4-hour chart is in a downtrend, right? And on the 1-hour chart, we see that it's moving up. So we probably won't get any trade setups for this particular pair during the day. GBP NZD on the 4-hour chart, that's in a uptrend, right? We did have a current cross here. It was that's a golden cross on the way up. So what we look for here is, and we probably missed this, we probably missed this here. We're looking for it to make a new recent high here. So what we look for is we look for this move up here. It makes a new recent high because back here we have this high. And then we look for a pullback that comes and touches, at least comes close to touching the 50-day, or it comes down and it stays, it's contained in this area between the 200 and the 50-day. If it would move down below the 50-day, 200-day, the blue line, then the trade would be invalid at that point. The signal would be invalid. But right now, what we're looking for, and you see here, we had a buy entry right here, right, on the 4-hour chart with the Fibo indicator, but it was actually expired at that point right there before price went through it. But this, we're going to draw a horizontal line right here. And what we're looking for here using the 4-hour dare trading strategy is, we're going to look for this now. It made a new high. It pulled back to at least this area of the 50-day, and it's inside the 250-day moving average, inside this area of value. And now we're going to look for it to make a new high. And then when it pulls back and touches this old high, that's when we're going to buy again. Okay. So again, there'll be more information on this coming out, but I just want to let you know that now as we're going through the charts. That's what we're looking for. Okay. We look for that recent cross. We look for the currency to make a new high, a new recent high, which it does right here. And then we look for a pullback to at least the 50-day moving average, or at least close to it, right? And then when it makes a new high, we wait for it to pull back to the old high, and that's when we would buy. We would pull the trigger to buy. We would use this area here to determine, where we're going to put our stop loss and how much we're going to risk. I'll go into that more later, though. So let's look at AUDNZD 4-hour chart. It's in a downtrend, right? And on the 1-hour chart, it's coming down here, and we could get a sell entry later today down here using the fibo quantum indicator, right? CHFJPY. This is currently in a downtrend on the 4-hour chart, right? So the global trend is down. And what else happens here? We had a recent cross, right? We had a recent cross here of the 200-day moving average right down. We had the death cross here. So if we look at this, right, we look for the currency to make a new low and then pull back at least close to the area of the 50-day moving average, okay? So right here it comes down. We don't have the cross yet. So right here we have the cross. It made the new low, and then we get the pullback here inside this area of value between the 200 and the 50-day moving average. So we mark this low right here with the horizontal line. And now what we're going to look for is we're going to look for this to move down, back down, make a new low. And then when it pulls back to the old low area, that's when we'll sell it. Okay. That's when we'll sell it. And what we'll do here, we'll measure from this low here to this high, which is basically 159 pips. Okay. So we would want to look to set our profit target at 1.5 times that, which would be about 225 pips. Okay. And in this particular trade, if we would get in it here, we would have to then determine where to put our stop, which we'd probably have to put it all the way up there as well. So more information on that will be coming out. I'll be doing a separate video for each of the 3 trading strategies that we're currently testing on demo. I didn't mention that, guys. This is on demo right now. We're testing these strategies on demo. This is my MT4 demo account that I'm on right now. Okay. So that was an overview of what I do. Now, I did want to show you one example of bad money management. Yesterday, we talked about money management. We talked about how once we're in profit, we need a strategy to exit. We need an exit strategy, right? We need a good exit strategy, and that's basically a trailing stop. So we talked about, hey, if we're up 25 pips in a trade, we should probably trail our stop to break even. Because if we're up 25 pips, the last thing we want to see happen is that the currency, it moves against us, and now we have a 25 pip loss. So we're up 25 pips, and you guys, like I said in the video, will have to determine all of this for yourself. You have to determine, how aggressive or conservative you're going to be. But to me, if I'm up 25 pips, it's probably time to move the trailing stop to break even. I'm going to show you an example here of a trade. I think it was in USDJPY. So this is an example of bad money management, because on my demo account here, I took I think like a $400 loss. Again, this is on the demo account, guys. And I'm going to show you what happened here. So right here, And of course, as I went over yesterday, this white box here, this is the area where we wouldn't take a trade. This is basically from 12 p.m. Eastern time till 7 or 8 p.m. Eastern time, because 12 p.m. London session closes. You only have the U.S. session open. There's just not enough volume in the market until about 8 o'clock at night when the Tokyo session opens. Okay, so this is the area when we wouldn't take a trade. So we get some signals here. We wouldn't take a trade. Now here, let's get rid of this thing here. But right here, we get a signal to get into this trade short. Okay. Now the first thing is, if we put, this is on the 1 hour chart, this is where we take our trades. So if we put the trend line there, the line on there, if we go to the 4 hour chart, here's the line. What do we see? Okay, we see that price is below the 200-day moving average, okay, which it was right here. Right here, you're all these areas here. You would look for only short trades. Okay. Now, right here, price pops up above the 200-day. So if you're looking at a trade and it would be that candle and it's above the 200-day, you wouldn't take the trade. Now, right here, price moves above the 200-day. So does that mean that we start looking for long positions now? No. We need a second confirmation, because a lot of times you'll see price will pop above the 200-day, but it will be an area of support or resistance. So it'll pop above, okay, but then it'll drop right back below. So we look for a second confirmation of the global trend changing, and that's what the 50 days on here for. So when this pops above here, we wouldn't take any trades until the 50-day confirms the global trend change by moving above the 200-day. So right in this area here, right, until about here, we would be looking for long positions. Now right here, price again now goes back below the 200-day. But we need that second confirmation before we would begin taking short trades. And we don't get that second confirmation until right here. Okay, so we decided to take this trade on demo, even though we didn't have that second confirmation. So that was the first mistake, right? That's a trade setup mistake. That's not a money management mistake. That's basically not following the rules for your trade setups. Okay, so we didn't follow the rules there. And like I said, I ended up getting stopped out on this trade all the way up here at the stop loss that they gave me here with the indicator, which was, it was a loss of like 74. It ended up being more like a loss of 90 pips or something like that because of where I got in. Anyway, that was the first mistake, was not following the trade setup rules, right? The second mistake was, at one point here, look, we get in this trade. It's not a bad trade, right? We get in this trade. We're actually up almost 60 pips right here. So if we would have followed our trailing stop rules, they're a part of our money management rule strategy, right? If we would have followed our money management trailing stop rules, we would have trailed the stop up to at least break even here, right? Depending on when we looked at the charts. Because when it was up 25 pips, we probably should have moved it to break even, right? But it's up 60 pips here. We probably should have locked in at least a 10 pip gain, which we would have got stopped out here with a 10 pip gain, right? Now once you get stopped out, you would look for the currency to then close above the sell signal and then drop back below it. And it never really does that here, right? It doesn't close above it. It moves back up above it, but it doesn't close above it. So first of all, if we followed our trade entry rules correctly, we would not have entered this trade, okay? But we did enter it. Had we followed our money management rules correctly, we would have trailed a stop here when we was up by 60 pips, and we would have gotten out with either a small gain or at break even, no loss, right? Sometimes in Forex, it's not about how much money you make. It's about how much money you don't lose that determines whether you're successful or not. And then what happens is this thing just shoots up, moves against us, right? One more thing though here, just to look at it. even if you didn't get out of this trade right here, which we didn't, it then gives us a second opportunity to get out right here where it's up 50 pips. Again, we could have locked in at +5, +10, break even. We didn't do that. It shoots up here. I think this move up here was on news. And then we end up getting stopped out over here with a $400 demo account loss. So that's an example of why you need to have your rules for taking a trade, and you need to follow them strictly. And more importantly, though, your money management rules. Once you get in a trade, and again, this is for when you're on your live account. On the demo account, it's not real money. Okay. You want to trade, though, as close to the strategy and the rules as you can so that you're determining if this would be a technique that you want to use on your live account, right? But it's a little more relaxed on your demo account, which is why this ended up happening, on this particular trade. But when you're on your live account, you got to watch your money, guys. I mean, you have money in a trade. If you have $1,000 account, you're risking $30 per trade, right? That's like you taking $30, putting it out on your front porch today, and just not keeping an eye on it, right? Put it on your front porch, maybe you put it on your sidewalk, just leave it out there. Somebody's going to walk past, they're going to grab it, right? If you don't watch it, right? So same thing in the market. You're putting your money out there, right? So if you have a live trade, you have to keep an eye on your trade. You have to follow proper money management. You have to trail your stop so that once you're up, you don't end up losing money on that trade for any reason. Trail your stop to break even or to where you're getting 5, 10, 25 pips, so that if it does move against you, you're not going to have a loss. Because I'm telling you guys, in Forex, it's not about how much money you make on a trade. It's about how much money you don't lose. Okay. So if you could keep making gains all the time by locking in profits at trailing stops, you're not going to have any losses. Okay. So you can have smaller gains if you don't have any losses. Okay. If your ratio to wins or losses is if you have a high win ratio, then your winning trades can be smaller because you don't have that many losing trades. Okay. Of course, you want to be able to also catch those big moves as well. But this was an example of bad trading. First of all, taking the trade, it was a bad trade setup, didn't follow the rules for the trade. And then we didn't follow any of the money management trailing stop rules to get money once this trade was in profit. Okay, so I will be back on later today, 7 o'clock Eastern time. Go over the charts again here. And also, if I take any trades during that time, I will go over and show you those as well. So stay safe out there, guys, and have a great day.